Okay, we're back. Another insight from this year's Red Hat Summit 2024 was around operational resilience. This is a big topic in financial services, big regulation in Europe, the DORA, Digital Operational Resilience Act. So I'd like to talk about the opportunities and impact that we're having in financial services. So, what lessons do you think we've learned so far around operational resilience, and how is that shaping current practices?
I'll jump in here, Paul, if you don't mind, guys. I think it take us back a little bit to 2008. There was a focus on balance sheet resilience, and then we moved into conduct resilience, and now the focus is on operational resilience. I'm actually convinced that all three of these things are linked, and I'm convinced it's actually technology that kind of has glued them all together. To that end, I certainly think that caution and stability have been ushered in because everyone now realizes the importance rather the criticality of IT for the running of the bank or any business and our economies. I also think there's been more of a focus on openness and collaboration in a way I don't recall seeing even a few years ago when I was last at a bank. Um, I do think it's well understood that we're all in this together and we all need to try to protect the stability of the markets. And I definitely think that those are some of the things that we've learned more holistically, if I can get a little bit, um, what's the word, philosophical on you, Paul.
Great. Now, are there key elements of a successful strategy that people should be considering out there?
Yeah, when I speak with customers, and I've been speaking with them quite a lot, especially here in the EMEA region, although I should say, we do have the DORA Act and the UK Operational Resilience Act, but there are so many other third-party management, risk management regimes all around the world that have been going on. I mean, the other two can tell me as long as we've all been working in banks, which is probably a really long time. So all this stuff has been around. Now it's kind of all coming together under one umbrella instead of having been implemented in silos at a product level, product and a bank level, not as a technology level. So the one thing I'm hearing the most from customers is that they're realizing from an operational resilience point of view, they have to think about it beyond the context of technology as an IT function. So they're starting to look across the whole business. They're starting to look at the resilience of their teams, their people, their operating model, their strategy, the tools they use, and how they work together. We're definitely seeing more cross-functional teams and an intensified drive towards agility because speed is really starting to matter. And if you're doing things faster and you're delivering software faster, you're delivering services faster to your end users, you also need to make sure that you have that resilience in place so that you can support that. And it was interesting when I really enjoyed Summit. This was my first face-to-face Summit. I'd only attended them virtually in the past, and it was great to kind of see this feel firms embrace collaborative, iterative, open working practices, that we at Red Hat are used to, right? This is how the open source community works. So it's great to see firms really starting to embrace those things and talk about embracing them, or how they've embraced them, which I think is really, um, not only do I like it, but I also think it's a step forward for us being more resilient collectively.
I mean, to echo that with Monica, and she's working on a couple of things, but the clients are starting to say this is business driven.
Yeah.
Mm-hmm.
Right. This is now part of the business model, period.
Yeah.
And technology needs to follow that. So you're seeing more and more of the business owners taking a more active leadership on how technology enables their business and also minimize operational risk and make them more resilient. So that's number one. The second one that we're seeing, going back to what echoing Monica, is that they are definitely working across um, uh, the industry to improve the infrastructure, be it industry bodies on what do we do better for reg reporting, all the way to these FMIs, financial markets. They're like, how do we improve working between ourselves and be a thought leader? So they're all working with one another because there's no competitive edge on this. This is critical, and they want to have that core infrastructure in place to be able to provide the service to their clients, right? So once again, business driven, work in a collaborative manner to improve the whole ecosystem. Yeah, and like Monica said, it's owed to us with open source, open community, but it's a change on from the FSI point of view. We still have, I think, a lot of what I call within the individual banks, but we're starting to see more of where there's a common denominator. They're all working together and trying to solve the common problem.
And I think a good example of that would be, Finos, fintech
Yep.
open source foundation, which has come
Yeah,
together with what's called Common Cloud Control (CCC). But it's
yeah,
a way that the banks can come together to figure out, what are our common challenges in terms of these services.
yeah,
What are the common set of risks? What are the common set of controls? So you've got a number of, tier one, tier two banks coming together collaboratively to say, what is this? We don't need to re-engineer this ourselves. And it was something that was, initiated by the CTO of Citibank to say, let's federate this. Let's share this. This is not going to be a differentiator for us, but it's a way that we can, mitigate risk across the entire industry. That's systemic risk.
And it's that the lowest common denominator again. We keep coming back to that very boring phrase, but I think it's true, right? It's not a differentiator, so we might as well guard our economies. And whether we all realize it or not, I was having this conversation with a colleague actually at Summit, and I said, you just whatever tapped your card for a coffee or a beer, whatever it was. I can't remember which. Probably a beer, if I'm honest. Um, what institution did you just interact with? Oh, it was a retail. Yeah, okay, let's talk about how you just made that payment, right? So once you get under the skin of all of these things, there's always a bank behind it somewhere taking money away or moving money between a merchant and a consumer. And I think that's the most important thing to appreciate is that we're connected now with technology, and therefore everybody has to think about these things and has to be resilient.
And the onion beneath that, in terms of third party risk, fourth party risk, fifth party risk, when you're dealing with different vendors, the banks are going through an exercise now to say,
Yep.
who are my suppliers? Who are they relying upon?
Yep.
What's my risk? Is this a critical system? Is it not? We, Paul, you touched upon DORA.
Yep.
There's third-party risk regulations in Canada as well.
Yep.
That's right.
Yep.
And
OSSFI.
other
Yeah.
regulatory, areas. So it's an area of increasing interest by the banks to understand, if there's a hiccup, how am I affected, and what's my plan B?
Right.
And it's that concentration risk bit, right? So if it's bank one and bank two put their list together, I would venture to say that they're going to have probably 80% of suppliers in common, maybe even 95% of suppliers in common. And that's really where you start to see the lack of resilience in the system.
Mm-hmm.
In some jurisdictions, I understand the regulators have come to bank and say, okay, you've told us you want to be in cloud provider A. Great,
Yeah.
makes complete sense. But your two competitors are already in A. You can
Yep.
pick B or C, but you can't pick A.
Yep. And in some jurisdictions, they're actually going as far as regulating some of the bigger technology firms. From a financial services point of view, in other jurisdictions, they're looking at regulating the biggest technology providers across the entire economy. For that reason, because if it's, let's say you've got a petrol station or a gas station that uses a provider, you've got three of your six biggest banks, and then maybe your national health service or one of your big health service providers. That's a risk to your economy.
And that goes back to why the businesses are owning this now, because it's impacting the business.
Yeah, exactly.
Yeah.
Okay. All right. Well, let's talk about what's next. Like, how does this affect their competitive advantage for a financial institution? Any thoughts there?
If you don't mind, I guess the first thing is, if you don't do it, you're going to be lost.
Yeah. Yeah.
That's all there is, because everybody else is doing it. So,
Yeah.
everybody's going to do it. And we've talked about this. It's improving controls, driving down costs, making yourself scalable. So if you're late to the game, you're going to get squeezed from a competitive point of view, right? You need to do this. And once again, from a business point of view, right? And I think that's the first statement, right? Yeah.
Yeah, and I mean, along that vein, and I'll try to be brief here, which I'm usually not known for. But if your firm is operating in a stable, secure manner, you're always going to have a competitive advantage. And if I think about this from a technology point of view, you can achieve this with standardizing your technology. And I think Stephanie Shiras said it best in her keynote. By using a platform that unlocks the strength of multiple process architectures, multiple hardware types, and in any location, you can achieve that. And that has all sorts of other positive knock-on effects, like what you were talking about before, Jim, about ESG, like what you were talking about earlier, Eric, around being able, to figure out where you run your workload and when from a cost point of view. So if you have that flexibility, you can then start to wait for it, use AI to help you make more informed decisions so that you
Yep.
can, reduce operating costs, keep things stable. And frankly, I think take some of the toil away from your employees and free them up to actually innovate and do what you want them to do, which is
And then from a business point of view, you have happy customers.
yeah,
Yep. You give the customers, ultimately, this comes down to giving the customers what they want, right? Make them happy.
I would just ditto what Monica said and just add that preserve optionality. I mean, I think that's what we're all saying here is these space is moving so fast. There's so much innovation that what the choices you're making today may be the best choices, but in 6 months or 2 years, different models, different GPUs, different places to run workloads, different ideas, it's all going to change. So the more that you can preserve that optionality, the more velocity you'll have in the future and more responsive you can be to customer demands.
Agreed.
Fantastic. Well, let's leave it right there. I want to thank our experts for sharing their ideas and their insights, and thank you all for joining us today.